Want to know the easiest way to grow your money over time? What if I told you that investing in index funds could be your golden ticket to financial success? Today, we're diving into the world of index funds, uncovering what they are, how they work, and why they might just be the perfect investment for you. So, buckle up, because this could be the start of your investing journey. Imagine this. You've got $1,000 burning a hole in your pocket. You could risk it all on a hot stock, or you could take the smarter route and invest in an index fund. What's an index fund, you ask? Think of it as a basket of stocks that mimics the performance of a specific market index, like the S&P 500. Instead of picking individual stocks, you're investing in a broad range of companies all at once. Why should you care about index funds? Here's the deal. They offer diversification, lower costs, and often outperform actively managed funds over the long run. Let's break this down. First, diversification. When you invest in an index fund, your money is spread out over many companies. It's like throwing a party and inviting a diverse group of friends instead of just one. If one company has a bad day, it's okay. Your other investments can help buffer those losses. For instance, let's say you invested in a tech-heavy fund. If one tech stock crashes, you still have shares in healthcare, finance, and consumer goods, balancing out your overall risk. Next up, let's talk costs. Active funds often come with high management fees because fund managers are constantly buying and selling stocks. Index funds, on the other hand, usually have much lower fees because they're passively managed. That means more of your money stays invested and has the potential to grow. Imagine this. A 1% fee might not sound like a lot, but over decades, it could cost you thousands in lost returns. Now, here's a surprise twist. Studies show that most actively managed funds fail to beat their index benchmarks over the long term. That's right. By investing in an index fund, you might actually be giving yourself a better shot at strong returns. It's like having a trusty guide through a forest of investment options. Easy, reliable, and straightforward. So, how do you get started? Here are 3 simple steps. 1. Choose a brokerage. Find a reputable online brokerage that offers a range of index funds. Look for one with low fees and a user-friendly platform. Think of it as picking the right tools for your DIY project. 2. Pick your index fund. Decide which index fund suits your goals. If you want broad exposure to the US economy, the S&P 500 is a great choice. If you're interested in international stocks, consider an international index fund. Just remember, each fund has its own risk profile and potential returns. 3. Invest regularly. Don't try to time the market. Instead, consider setting up automatic contributions to your index fund. This strategy, known as dollar cost averaging, can help you invest consistently, regardless of market fluctuations. Picture it like planting seeds in your garden. Water them regularly, and you'll reap the rewards in time. Now, let's get real for a moment. Investing isn't without risks. Even index funds can fluctuate in value, and there's no guarantee you won't experience losses. It's essential to assess your risk tolerance. If you're young and have time on your side, you might be comfortable with a higher allocation to stocks. But if you're nearing retirement, you might want to look for more conservative options. So, what are the key takeaways? 1. Index funds offer diversification, helping to minimize risk. 2. They generally have lower fees compared to actively managed funds, allowing you to keep more of your returns. 3. Studies suggest they often outperform actively managed funds in the long run. 4. Start by choosing a brokerage, picking the right fund, and investing regularly. Are you ready to dive into the world of index funds? Drop a comment below and share your thoughts. Are you team index, or do you prefer picking stocks? Let's hear it. And before you go, don't miss our next video, where we'll explore an investment type you might not have considered. Trust me, you want to stick around for this one. Happy investing!